In this module, we're going to talk about derivatives. Now, a derivative is a kind of security, whose value depends on other and more underlying basic values. So, in recent years, the derivative securities have become so important in the area of finance and investments. There are things called futures and options, which are usually traded on different stock exchanges. There are forward contracts, there are swaps, and there are options, and there are different kind of options. And in financial institutions and the corporate clients, they call this over-the-counter, OTC, over-the-counter instruments. And some other of the derivative securities, they could be referred as bonds or stock issue. Derivative security could also be known as contingent claims, and sometimes you might come across a contingent claim, or sometimes you might come across as derivative security, and they're very two same things, and they're traded with prices, and they're traded securities. For example, a stock option is a derivative security whose value is contingent on the price of a stock. However, we see that the securities are contingent on almost any variable. For example, price of the amount of snow falling in a certain ski resort. It depends on the stock prices of that ski resort. There are two objectives. First, we're going to explore the securities and the normal encountered practices, and secondly, the framework in which the derivative securities can be valued and hedged. First, we will look at contracts and futures and options, and later we will see more how they're traded in details.